It's been a painful 2 weeks. I think some of the ways to think about why we're near an end is inflation expectations have way overshot to the upside. 1 year forward inflation is at 4.5%. It's where it was in October 2022, March 23, October 2023. So at the peak pessimism.
That's one thing.
Yeah, short interest has soared. Like 1 week, Goldman shows 1 week short interest in ETFs rose by the most since 2022. Median short interest in stocks is at basically a 3-year high. We're really oversold. If you look at internal measures like the percentage of stocks over their 20-day moving average, it's down to 8%. Again, a turning point. And now we just need a positive catalyst. I think as long as inflation tracks better than expected, I think we're in a good position to rally.
You look at different things in Katie Stockton, obviously. She said that there has been some damage, therefore she thinks there's maybe some more work. Not a whole lot more work, but maybe some more. Do you look at that? Has there been some damage, or do you see all positive indicators as far as maybe we're getting close to the end of the beginning of the end, end of the beginning?
Yeah, I think probabilities probably is what she's looking at, and I think there has been a lot of damage to the markets, but there are ways to look at why things could be turning. Mark Newton, our head of technical strategy, says the cycle turn date he was looking for is April 20th, and that's
420.
Yeah, 420.
Perfect.
And if you look at things like the DeMarc count, we're at almost a 7, so we're only 1 or 2 days from a potential bottom or turning point.
And we're oversold. We actually got oversold really quickly.
Yeah.
I don't know why.
Well, they say bull markets rise in an escalator, fall in an elevator. So it's what you'd expect in a rising trend is sharp corrections, and it shakes people out. And I think there's a lot of top callers, but to me, I think this is a good opportunity.
So also the day before 420, did you know 420-24 is frontwards and backwards?
Oh, it's a palindrome
It certainly is. But the day before was the halving. And what does that mean to you for your Bitcoin
it's a reminder of the sound money of Bitcoin, right? Because it's pre-programmed every 210,000 blocks to cut the block reward. We know it means you're cutting supply, but demand has been strong, and actually Bitcoin network usage has really been strong because of things like the Brune protocol. So you've kind of made the demand side stronger and the supply side smaller, so I think it's upward pressure on price.
So you always have crazy forecasts. What's your forecast now? And I'm doing something while you're doing this.
Yeah,
What's your forecast?
well, I think Bitcoin definitely makes new all-time highs this year, so we think something like 150,000 is probable this year. And then longer term, I don't think there's anything wrong with those targets people have, like 500,000 for Bitcoin or much higher.
Tesla is the big standout. It registered expenses of $2.4 million for Elon Musk's security last year, with an additional $500,000 spent in the first 2 months of this year.
And Tesla, as we've been reporting, slashing prices on several vehicles and in several global markets, including the United States. It's dealing with slumping sales, rising inventories. Phil LeBeau joins us now with more and can tell us exactly what we need to see in Tesla and Toyota for for them to switch. Not that far. Market cap.
I mean, they're very close, Joe. And when we'll show you a 2-year chart at the end of this report of Tesla and what's happened. Take a look at the decline since last July. A little teaser there if you want to see how much this has dropped. The news over the weekend, starting on Friday here in the U.S., and then we saw it confirmed in other markets worldwide, they're cutting the price of the Model Y, S, and X by another $2,000. And look at what they're going to be doing with the price of full self-driving here in the U.S., dropping it down to $8,000 from $12,000. Tomorrow, that's when we get the numbers from Tesla regarding the first quarter. And I hate to say it's almost like, well, we know it's going to be pretty poor relative to what Tesla has done in the past. So does anybody really need to see it? Yeah, they do need to see it. The estimate is for a profit of 49 cents a share. But if it comes in shy of that, that's not what's going to be driving the stock lower. By the way, we expect first quarterly or first year-over-year decline in revenue in 4 years. Just over $25 billion is expected in revenue. The focus is going to be on the conference call and on the guidance. So gross margins in the first quarter, they're expected to come in down about 15.9%. But if it's lower than that, I've talked to a number of analysts who said, look, it could be down around 14.5% that's not what's going to move the stock much lower. It's the guidance for the second quarter and for 2024 specifically. What does Elon Musk say about small car production plans? Is it gone completely, or is it simply taking a backseat to robo-taxi plans? In terms of deliveries, the small car does matter because the growth trajectory in terms of annual deliveries, that's what's been driving the stock. Really, over the last 6-7 years, people have been saying, well, look, they're going to grow annual deliveries by 50% every year. Nobody thinks that's possible anymore, at least not in the near term. The delivery estimate, by the way, for 2024, just under 1.9 million vehicles. They delivered 1.81 million last year. And if you take a look at shares of Tesla over the last 2 years, look at what I was talking about if you go back to July. It's a little bit hard to see here, but basically the stock has been cut in half. It's down to 143. I think it was up at about 290, 288, 290, something like that last July. And as you mentioned, guys, they are coming real close as the stock continues to fall and the market cap continues to fall, coming real close to falling back below Toyota in terms of the most valuable auto company. But the big focus tomorrow night is the conference call, guys. What does Elon say about the robo-taxi? And it has to be something more than this is going to unlock the future. This is a quantum leap. This is where we need to go. I believe it's going to happen. I think people would like to see some benchmarks thrown out in terms of when, beyond the unveil, when do we actually see it, in his opinion, put into production, into service?
Phil, am I misunderstanding this? To have a robotaxi in the wild would require level 5, right? In terms of
correct, and they are not there. They are not at level 5.
human intervention, and they haven't been there. So the question is, do you think they're going to announce tech that they think they've somehow gotten there, or is this going to be a
that's a huge
1,
jump,
2,
Andrew?
3 year
It's
dream?
It's a huge leap of faith to believe that they can say definitively 2027. I'm just throwing that out there, or 2028. We will have the driver completely out of the car. And if you are a Tesla owner, theoretically, you turn it into a robo-taxi. You would be part of the Tesla robo-taxi network. And when you're not using it, it toodles off. It does what it needs to do. It gives people rides from point A to point B. No intervention at all. That's a huge, huge leap from where they are right now in terms of technology.
Ahead of the busy week of tech earnings, Anastasia Amoroso is chief investment strategist at iCapital. It'd be nice and clean to get 10%. Will we?
I don't know if we're going to get there, Joe. And, the reason I say that is because we came into the month of April with a very tough technical backdrop, but we've quickly corrected that. And so what was an overbought conditions for stocks is now shaping up to be an oversold condition for stocks.
That's quick.
Very, very quickly. And, it's interesting. In the beginning of April, you really couldn't find any investors that were bearish on stocks. And now the percent of bears is just about outpacing the percent of bulls. So I do think we got a pretty quick technical correction. And with almost, between $3.5 to $4 trillion of money markets on U.S. households' balance sheets, I think investors will be looking to step in.
I don't know if fundamentals are ever coincident with what actually happens in the stock market, but we've got plenty of reasons to explain 5%, given what's changed in the last 6 weeks in terms of inflation fears, rate cut hopes. I don't even, there's some people saying 2025 now.
Right.
And they say, until we get the first cut. How do we know it's even going to be a cut and not a hike at this? So there's plenty of, does that shift to allow us to make a bottom at only 5%?
Yeah, I'm really glad you bring up the fundamentals because there has been a repricing, specifically in yields, and I actually think that's very constructive. So when I look at yields today, we've moved, almost 100 basis points since the beginning of the year. Not quite, but what that means is that the market is now more in line with the Fed's thinking. The market is more in line with where we're seeing growth, and the market is more in line with inflation expectations. So what I like about the 10-year at these levels is that it's actually trading above the implied fair value by some models. We've now priced in maybe a rate cut, if that. So I think the market is exactly where the Fed wants it to be right now. And so if the 10-year Treasury yield can pause around current levels, that's another reason to say that equity market probably presents good value.
Someone pointed out we're up 30% or so, even after this pullback in the S&P over the past 18 months. Why is bearish sentiment, why was it rekindled so easily with only a 5% pullback? Why aren't people more in love with this market?
Yeah, I think a lot of people were optimistic on the markets because of the rate cuts. That was a big narrative going into the year. But, there's another reason to be optimistic about the equity markets. Even without the rate cuts, you have resilient growth. We get GDP growth for the first quarter this week, and we're looking for about 2.5% increase in the fourth quarter GDP. That's a reason to be optimistic on the market. But for those, previously in the bullish camp, they were looking for rate cuts, and that's why they flipped to the bears.
So bear sentiment right now is been increased enough to where you think we make a bottom before a further pullback, before another 5%?
I think you always need a catalyst. And for this week in particular, obviously, we got the big tech earnings to look forward to. And I like that the reset that we've had in some of those valuations as well. But the other catalyst I'm looking for is actually this Friday, which is the core PC number. Yeah. Clearly, the last few months of inflation prints, that's what's really stoked the bearish sentiment. But if you look at the core PC, the big distinction between that print versus the other inflation print is you have a lot less housing exposure. So versus 32% in the core CPI basket, here you have about 15 or 16% exposure. And by the way, last week we've got the new tenant rent index that registered a 0.4% year-over-year increase versus, it was running at 12% a couple of quarters ago. So I actually think the core PC number, if it comes in line with expectations of 0.3 month-over-month and 2.7 year-over-year, that could be your catalyst, Joe, to kind of say that we have had enough of a correction.
What happens if it's hotter?
Well, then I do think, Becky, that there's more downside to go. And although I'm encouraged by the pickup in the bearish sentiment, the reason I say investors should be looking to buy this pullback gradually is because you do have a lot of length from systematic investors. So, for example, the commodity trading advisors, they're just about near max long. If you look at hedge funds, they've added a lot of gross and net exposure. So if we do trade down because of a core PC miss, then I think you have more of a technical unwind. So, look, investors still are sitting on those money market funds. And I think a lot of investors have their strategic allocation, but they're underweight equities quite significantly. So we've been waiting for this all year, is for the opportunity to get back to strategic allocation. And I think that's what this pullback is about. You don't need to buy it all here right now, but gradually buying the dip is what I would do here.
S&P Technology Index now down more than 9%. 29 of the NASDAQ 100 are now down 20% or more from their 52-week highs, led by chip makers AMD, Intel, and NVIDIA. Joining us right now to talk tech stocks and so much more, Stephanie Link, Hightower Chief Investment Strategist. Are you looking at this and you're saying, oh, my goodness, everything's on sale, I should go buy some of this? Are you saying to yourself, the knife is falling, I'm going to keep letting it fall until I want to catch it?
Well, I think the expectations are still pretty high, Andrew, but I do think we are getting a couple of good looks at some of the bigger names in technology. I own Amazon. I like that name a lot. And I own Apple, and I like that name a lot. And I know that's pretty controversial, especially as numbers are coming down. But I do think both stocks offer good risk reward into the prints, and I would be long both of them. I like IBM very much. As you know, they're really turning the company around into software and consulting and services and recurring revenue is going on the way up, which is good. And they are an AI play as well. And I like Lam Research. That stock has come down quite a bit. I think semi-cap equipment is very interesting. You need 6 times the memory for AI. And these guys are one of the leaders. And wafer fab equipment is actually recovering. So I can pick and choose within tech, but I will say I am underweight the sector relative to my benchmark because I do think that there are other areas in the markets, energy, financials, industrials, that are very attractive that I think are also going to put up some very good numbers.
We're going to talk to Phil LeBeau in just a moment about Tesla, because that stock has taken a real shellacking, I think is the technical term. Yeah. Do you have a view on what we're going to hear on Tuesday?
Well, I never like it when margins are going down in any company. And that's what's been happening over the last year and a half for Tesla. And that is a big problem. Not only that, but it's competition. And it's also hybrids are taking share versus EV, the pure plays. So Toyota has done amazingly well in this front. And I think that's the way I would go at this point. I think we kind of pulled forward a lot of the expectations in terms of EV demand. And so I think you just want to be, kind of careful in that space. and the valuation is still just too hard for me to get my arms around, Andrew.
In terms of the quote-unquote AI play, everybody wants to play artificial intelligence, and the best way to have done that over the last several years has been to buy NVIDIA. At this point,
Yeah.
do you want to own either them or one of the other chip makers, or is there some other play? You want to own Microsoft? You want to own Google? How do you think it?
I mean, I think you definitely want to have AI exposure. You can own NVIDIA, although I think everybody owns NVIDIA, and I've never really made a ton of money when everyone's on the same side of a story. So I own Broadcom, for example. I mentioned Lam Research and how AI is very important on the memory side. I own Snowflake, which has not been a great call. It's down about 30% from when they reported earnings, but I do think AI is only as good as the data you put into it. And these guys do that in size and scale. They do have a new CEO. It's a kind of a prove me moment for the company, but I do think the setup is really quite interesting. And maybe it's a little off the radar screen versus a pure play like an NVIDIA.
Stephanie, the momentum last week was so violent. You know, this Bay of Fundy sort of tidal shifts that are taking place. $950 billion in market cap lost from the Magnificent Seven. NVIDIA losing $300 billion. That's more than an entire AMD. Yet we're only 5.5% from the all-time highs for the S&P 500. Do you think this continues, this pullback, or do you think that people stop and look at the earnings and look at a great economy and say, okay, maybe we hold here?
Well, I think technology has competition, Becky, in terms of earnings and other sectors reporting very good earnings. And that's one of the reasons why I think you have seen a broadening out in the marketplace. Since October of last year, we've had some fits and starts along the way, but we are seeing many more names, many more sectors participating because, yes, as you mentioned, the economy is growing at about 2.9%. Last week, we had the IMF increase growth to 3.2% for the global growth. We had China's GDP coming at 5.5%. So all of this means that I think earnings can be better than expected in a lot of various different sectors. And so I'm overweight energy, I'm overweight industrials, I'm overweight financials. I think the numbers are going to be good. I do think tech, there's a place in the portfolio for tech, but they're more vulnerable. And I think we just have to step back. We are 5% from the highs in the S&P 500 in a month's time, but we are also up 30% in the last 16 months. We have had a heck of a run. The long-term average, as you know, for the S&P 500, the total return is 7.5% to 8%. So we've definitely had a good run of it, but I think now is the time when you're going to see other companies take the spotlight beyond tech.
Founder and portfolio manager at Niles Asset Management, Dan Niles. Dan, great to talk to you again. Thanks for the time today.
My pleasure, Carl.
You think this is really more about yields than maybe worries about the structure or duration of earnings themselves?
No, I think it's both, because if you look at, obviously yields have gone up from 3.9% on the 10-year to 4.6, so up 70 basis points, driven by the fact that the Fed, now we've gone from discounting 6 rate cuts to maybe none. But the other part of this is, if you remember the early tech reporters, they weren't necessarily the greatest. They all had some issues with them. TSMC, the numbers didn't change. They're the foundry for NVIDIA. And they basically cut revenue growth for the entire semiconductor industry, and they cut revenue growth for the entire foundry industry. So that's one. ASML, the orders for their EUV equipment, which you need to produce the most advanced chips, the orders were absolutely horrific, which is why the stock got hit by 7%. And then, you look at Netflix and you can say, well, the numbers were solid, but they're also withdrawing disclosure for their most important metrics that they've had us focus on since they became public. So there are some fundamental things going on, and, obviously Tesla deliveries, and you can go through the list. So you can't discount that.
Do you think then, as you go through earnings calls, one of the most important lines is going to be about digesting some of this CapEx R&D boondoggle that a lot of people have been on regarding AI?
Yeah, I mean, I think even if you go back to the tech bubble, and I talk about Cisco, Cisco had some pretty heavy drawdowns on their way to being up 4,000% from the end of 94, which is when Netscape Navigator hit the scene, and we heard about this new thing called the internet, till their ultimate peak. And so you had digestion periods within that, even as you built out the internet infrastructure. If you look at NVIDIA, the quarter before we heard anything about this thing called ChatGPT, they did $4 billion in revenues. If you look at the quarter they're about to report in a couple of weeks, people are expecting $24 billion in revenue, so up 6x in the period of, a year, less than a year and a half. And so now we're into the phase of, okay, all these customers have bought this stuff, they're deploying it, but are you getting return on investment on it? And that's still a little unclear, because outside of NVIDIA or SMCI, et cetera, how many software companies have you heard of reporting upside where the numbers have gone up that are buying this stuff, or hyperscalers where they're deploying this? It's a very short list.
Dan, I wanted to ask you about Apple, because you've been up and down on Apple, but I feel like mostly down lately. Are you still feeling that way? Because we've already seen a downturn in the stock, and I feel like expectations aren't that great right now.
Well, you got to remember, there's a difference between fundamentals and stock prices. And people tend to go, oh, well, if the stock's up, the fundamentals must be good. Apple's fundamentals haven't been great for the last 3 years, because if you look at it just purely from a revenue basis, the revenues that they guided for the March quarter is exactly the same as 3 years ago. How many tech stocks can you think of where the revenues are identical to where they were 3 years ago? It's a very short list. So the stock's gone up on a lot of multiple expansion. You have buybacks, you have dividends, and all this other stuff. But at a certain point, and you never know when that point is until you sort of passed it, you've got to make the numbers. And we've been talking about Huawei coming back into the market now since September of last year, and they're continuing to gain market share. And Apple is behind in AI, which is why you keep hearing about them maybe partnering with Google or someone else. And so at a mid-20s PE, I don't know why you would pick that name over a myriad of other names in tech that are growing revenues, earnings, and that don't have the same competitive issues as an Apple does. And so that's why we, yes, you're right. We take advantage of oversold conditions to buy it, or events where we think people might get bullish. Maybe that'll happen in front of Worldwide Developers Conference in June, where everybody gets hyped up about AI phones. And then you figure out, oh, it's just table stakes, just like everybody else has AI-enabled smartphones at the high end already. But yes, on a longer-term basis, at this valuation with no growth, I don't know why you would be bullish.